Yo, what's up, guys? It's your boy Kim Caesar, and you're tuned into the Kmo Expedition. So, guys, in today's video, we'll be going through mainly the genesis of Forex because this was a video requested by my little sister. So, I decided to make an exhaustive video regarding a few of those aspects that people need to get accustomed to when they're starting out with Forex. So, mainly what are candlestick patterns, market structure, basically the two apps that we use in Forex, MetaTrader as well as TradingView. So all those important aspects are going to be included in this video. But I think the main thing to remember is I'm basically giving you information based on the strategies that I'm learning or that I learned that are getting me to consistency. So hopefully this will help you guys as well. So let's get into it. Yeah, guys, so we're back at it. So what we're basically going to start with, guys, is the most basic one. What is Forex, right? And Forex trading is the trading of one currency for another. Basically, it's like going to the shop, exchanging your money with goods, basically. But in this case, it's just basically exchanging money with money. That's just basically how it works, right? So in the Forex market, we basically identify chart movement with candlestick patterns, or rather candlesticks, right? So basically a candlestick is a tool that we use to measure the movement of the market, right? So this is basically what a candlestick rather looks like, guys, right? So the red ones would basically show the momentum to the downside. We call it bearish. So bearish in Forex is downward movement, and bullish in Forex is upward movement. So these green ones would identify the upward momentum of a market. Alright, guys, so basically this slide over here, let me just remove this, guys, pardon me. So this slide over here basically just shows us the types of movements in the market that are determined, or rather that the candlestick show us or identify for us. Right? So in a simplified way, when the market is going bullish or bullish or bearish rather, a bearish trend or a bearish trend pattern is when the market is going down, right? And a bullish trend pattern is when the market is going up. So these attributes are basically just linked, right, with the two basic animals. Instinctively, when a bull attacks, it attacks in an upward motion, and when a bear attacks, like it lunges on you, so it's like a downward motion type of thing. So this is what the movements in the market were basically attributed to, right? So these types of patterns in the market are basically what show us either a continuation in the market, or when you see either a reversal, a change in direction rather. So these are the different turning points that you would get when the market is still continuing bearish. Right over here on your left hand side, top left over there, right? You can see as the market comes down and then it corrects. So the market moves in impulses. It moves in just impulse, correction, impulse, correction. So I'll show you that as we go on with the slides, guys. So this is basically when the market shows you what it impulses or is in a continuation movement towards the downside, right? And this is maybe when it shows you that it's about to turn from an upward direction. So in this scenario, we would say the market was basically going up, and then over here these candlestick patterns are just showing us that it's about to make a turning point. And when we jump onto the right hand side, guys, with the bullish trend type, right, this is basically when it continues towards the upside, right, when it shows you the momentum is to the upside, guys. And then on the second one over here is showing you basically what I showed you in the previous one, just vice versa, guys, showing you when the market is changing direction from having had a downward momentum to now coming to a turning point. See, guys, that's basically how it works, guys. So these are candlestick patterns, right? And then market structure, guys. Market structure is basically, let me just show you with a slide. This is basically what market structure is, right, guys? A momentum in a specific pattern towards the upside, right? There's basically an impulse over here, correction, impulse, correction, impulse, correction, and so on and so forth. That's basically how the market moves. So when it moves upward, it shows you, like they've indicated here, these H, 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 L, H, H. It creates higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, basically, guys. This is basically when it's going up, creating higher highs and higher lows. But the minute it breaks the most recent higher low, there's an indication that the market is changing direction, and it would no longer be creating higher highs and higher lows. They just didn't indicate here. So they'd basically be creating lower lows and lower highs. Like over here, guys, check on your right hand side over here. See, this would be a high, and this would be a higher low, right? Basically a higher low would be over here, a lower low would be here, a higher low, lower high, lower low, and so on and so forth. So this would basically be the vice versa of what we see on our left hand side, guys. This is basically what market structure looks like. So when we dive down deeper into it, so on these two slides, guys, just on your top right over here, you can see these type of candlestick patterns. This is basically what you'd be subjected to in the market, guys. So let's say the market was coming up like this over here, and then this pattern over here, these candlestick patterns over here, show you that the market is about to change direction. So once it breaks below the previous low of the previous candlestick, you know it's most likely to be heading down. So those are the kind of things that we would wait for in the market. We either wait for a breakout, a fake out. So it just depends on how patient you are in the market, depending on how effective you want to stretch the strategy that you're using. So like I'd already mentioned in the previous video that I made, that 90% of this game is psychology, guys. So that's the main thing to keep in mind, psychology, guys. So going forward, guys, I'm actually wanting to include pips as well as lot sizes, so that you guys know what we talk about when we talk about pips and as well as lot sizes, guys. Let me just remove these two. A pip in the market, guys. So let's just go over here. Lot in the market. So in the forex market, guys, basically a lot is the number of currency units you will either buy or sell. Let me just show you practically, guys, on our MetaTrader 4. So this is our MetaTrader 4 app, one of the apps that we use to trade, guys. So on a MetaTrader, this is on your top left over there. This is where you see your lots. So these are basically the units that you'd be trading, either gaining or losing, depending on how good how a trade is going, either good or bad. So the odds of those would depend on how effective your trading system is, guys. So this would be a mini or a nano lot, guys, right? And then when we increase it over here, this would be a mini lot, right, guys? And then as we increase it, let me just do this to save time. And this would be a standard lot, guys. So what the difference is, like one would ask, what are the differences between a nano, a micro, and all of that, guys? So the difference in the lot sizes determines the amount of profit either one or percentage either one will gain or lose. This is basically it, guys. I'll just go as quick as possible on this. So on a standard lot, guys, so basically one pip is equals to $10, right? And then on your mini lot, one pip is equals to $1. On your micro lot, one pip is equals to $0.10, right? So this is basically the mini ones, the cents in a sense. So the nano lot, 0.01 lots, right, is equals to 0.01 pips in dollars. So this would basically be in cents, guys. So we incorporate this with a pip. So a pip is basically, we call it percentage in point. Another form of how we gauge how much the movement has or how much the market has moved in that number. So call it like kilometers, right? Maybe from a certain point or where you stay to a specific rendezvous, you take a certain amount of kilometers, right? So we measure the movement of the market in those pips, guys, and this is how I'll show you pips. So see from here, right over here, guys. So the market was impulsing, so it came in this upward movement, and then over here it corrected. So let's say over here, so let's say it had just ended on this part and it hadn't made this movement to the upward like we've seen. This is basically a trade that I would have been waiting for. So as soon as it crosses, right, my trend line and then breaks below, let's say that's where I'd have put my pending order. So from there to that upward, so see after that 14 over there, there's 18.8, right? So it would have moved 188 pips basically. So that basically would be the kilometers that it had moved, but this in pips, right? So it has moved 188 pips to the upside. So you would have maybe gained that amount of pips as it moves to the upside, guys. So what is a pip in Forex, right? We want an exhaustive explanation based on pip. What is a pip in Forex, guys? so here's so here it is, guys. PIP is an acronym for percentage in point or price interest in point. A PIP is the smallest whole unit price move, right? This is the most important thing. Move that an exchange rate can make between two currencies, guys. So this is basically how we measure the movement between these two currencies as the exchange happens. We measure that in this amount of unit the market moves in pips, guys. Price in point. This is basically what it is, guys. And then going on further, guys, I think the most important thing to now keep in mind are just simply the terminology in terms of forex trading, guys. We tend to overcomplicate things. Please comment down below. Yeah, guys. So that's from me, guys, and the KMO team. The marathon continues. Make sure you like, subscribe, and share. And like I've already mentioned, guys, comment down below if this is helping you out, and if you'd like me to be more exhaustive, if I'm too fast, Tell me, guys, let's be interactive.